Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Maanshan Iron and Steel Company Limited quarterly report. Maanshan Iron and Steel Company Limited offers a diverse range of businesses and services across various industries. The company manufactures and sells iron and steel products, including steel plates, section steel products, high-speed wire rod, and hot-rolled reinforcing steel products. In addition to these core products, the company also produces related byproducts such as coke, coal tar, crude benzene, ferric sulfate, and coke oven gas. These byproducts are sold to various industries, further expanding the company's reach. The company serves a wide range of sectors, including construction, automobile, bridge building, machinery, petroleum transportation, home electrical appliances, and high-grade light industries. Its products are also used in packaging and utensil manufacturing, steel structures, construction of petroleum drilling platforms and railways, production of robust materials, pre-stressing strand steel wires, and spring steel wires. Furthermore, the company's products cater to the needs of railway transport, port machinery, petrochemical, and aerospace industries. With a rich history dating back to 1953, Maanshan Iron and Steel Company Limited has established itself as a leading player in the iron and steel industry, providing a comprehensive range of businesses and services to various sectors. Maanshan Iron and Steel Company Limited market capitalization of 20 billion is significantly larger than the average industry peer of roughly 0 billion. This shows that Maanshan Iron and Steel Company Limited holds a significant advantage in their industry. Maanshan Iron and Steel Company Limited trades at a higher price-to-book ratio of 0.4 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of various factors. On one hand, revenue decline is evident in certain instances, such as a -8.79% decline on page 2, although no specific driver is mentioned. On the other hand, revenue growth is driven by several key factors. An increase in production has contributed to growth, with notable increases in pig iron, plus 3.94%, crude steel, plus 1.17%, and steel products and ingots, plus 2.04%. Additionally, improvements in operating performance have also played a significant role. Furthermore, the sales proportion of 2+2+N products has increased by plus 6.4 percentage points, while the terminal rate of steel products has risen by plus 19.3 percentage points. The export proportion of steel products has also seen an increase of plus 2.9 percentage points. These factors have collectively contributed to revenue growth. The net income of the company experienced a significant increase in both Japanese yen and Chinese renminbi currencies. In terms of Japanese yen, the net income rose by yen 92,672,812, while in Chinese renminbi, it increased by RMB 193,924,543. This substantial growth can be attributed to the difference between the two currency values, with a calculated increase of RMB 118,970,133 minus a decrease of RMB 74,954,410. The profit margins of the company also underwent a notable change. The operating profit margin decreased from -0.39% to 0.73%. This improvement in profit margins can be seen as a positive indicator for the company's financial health and efficiency. The company is indeed generating positive operating cash flow, as evident from the net cash flows from operating activities reported in its financial statements. On page 2, it is stated that the company has a net cash inflow of Rm 413,446,676, indicating a significant increase in operating cash flow. This trend continues throughout the year, with further increases in operating cash flow reported on pages 4 and 7. Specifically, the company's operating cash flow increased by $434.12 on page 4, and by Rm 1,148 million year-on-year on page 7. These figures collectively demonstrate a consistent pattern of positive operating cash flow, suggesting that the company is managing its finances effectively and generating sufficient cash to meet its operational needs. The company's debt level is not explicitly stated in the provided information. However, it can be inferred that there may have been a change in debt level based on data from page 15. On the other hand, the company's interest expenses have decreased significantly over time. According to page 11, interest expenses dropped by 36% from RMB 138,760,033 to RMB 88,786,928. Furthermore, as of 2026, page 15, interest expenses were reported at RMB 86,312,616, which is consistent with the downward trend observed on page 11. This indicates a substantial reduction in the company's interest expenses over time. That concludes the financial summary for Maanshan Iron and Steel Company Limited. Feel free to comment below, and I will be happy to answer them when possible.